Hello, and welcome to Genpak's continuing series on the 8 anti-money laundering and counter-financing of terrorism national priorities. In this episode, we discuss the priority of fraud. For a discussion on fraud, I'm joined today by 3 of Genpak's financial crime compliance leaders, Joe Gillespie, Quentin Hout, and Shivani Thacker. So I'd like to dive into some questions and explore a little bit more about the national priorities around fraud, and then in particular, how they impact the AML practitioners at financial institutions. So Shivani, just to kick it off, maybe you could share with us a little bit, what are the big fraud issues that Genpak's clients are currently seeing, and maybe just talk a little bit about how they're dealing with them.
Right. So our clients are looking at fraud from 2 aspects. One is cybersecurity. Where is the fraud originating from? And then fraud as well. So from a cybersecurity perspective, they're seeing an increase in ransomware. We've all seen it in the news where it comes to SolarWinds or Log4j. It comes from international espionage, and organized fraud rings. They're also having to deal with a couple of very more intimate things that has to do with the financial institution. So for example, the expansion of the network edge as people are working from home. There's also the metaverse that is an expanding growth. All of this is causing financial institutions to think about their policies and procedures that they're having to put into place. People are having to put in policies and procedures about simple HR things like you can't, a manager can't be monitoring WhatsApp for employee absences, for example, or talk about contact customers through WhatsApp. Customers want to do that. And so there is no policies and procedures. There's no way of reporting what's happening in these social media. There's also the supply chain risk. So ensuring that third-party vendors are as secure as the organization. That's also a growing concern. And also there's the macroeconomic factors that we're now experiencing. So for example, are we in a recession? Are we an impending recession? An increased economic hardship, where a total household income might decrease, that might encourage an employee to be more open, susceptible to collaborate with bad actors and provide an internal fraud risk. There's also that great resignation, or what's being called the great reshuffle in some places. So organizations are having to look at their termination policies and procedures to ensure that their network edge and their network is secure. How many times have we had employees leave and not really followed the procedures on a timely basis? So I'm seeing that. Now, how is that impacting fraud? From an account takeover basis, there's definitely identity fraud is on the rise. And identity fraud comes from 2 factors. One is the account takeover, where an account is actually stolen, like through data breaches. And it doesn't have to be a data breach from the financial institution. It could be a data breach from all the other like retail networks, metaverse, the Internet of Things. And so financial organizations are having to worry about data breaches in general for account takeovers, because a lot of the information that's the PII information is the same. People have the same passwords when you're shopping at an e-commerce website or your bank, right? There's also the synthetic fraud, which is, bad actors that are constructing identities from, pieces of real information from a real person, and then they're marrying it with, fake addresses, and phone numbers. And they're also creating social media accounts to appear like a real person. And they're letting that kind of nest and mature for several months or years before they actually do that fraud attack.
Joe, quick question for you. With so much concern around ID verification, synthetic IDs, account takeovers, what are you seeing in technology development currently, and then what do you see happening in the future to deal with this issue?
Yeah, great question. And I divided it, into a few different areas. One, there's kind of what's being pressed from the regulator, what's being, sort of mandated. And there are, new things coming in terms of, real identification of people, where it used to be branch banking, you'd walk in and you could have a conversation face to face and you could try to authenticate the person. Now in the digital world, the regulations and policies are coming out to try to enforce that, right? Video verification, just the step that maybe you need to talk to a live person. It gets a little harder to fake, but it's, that's one of those things where it's just a constant evolution, because the good guys try to do something better, the bad guys outsmart it, and you're constantly putting in enhanced controls. And so there's that piece. There's another piece around, using the data and signals, both that an institution has, but then, things that they can get at. So you mentioned, the bad guys, because good guys have been using, information that was available to authenticate and confirm, an identity. Well, then bad guys can go get that same data and they can look real. They can actually use all of the correct information in order to construct an account for various reasons. But getting access to, behavioral signals and things that about actors, right? Whether it's the first time they're applying for an account and building up a baseline on them, knowing whether something makes sense, where do they appear to be coming from, doing all the basic hygiene things that are just normal for cybersecurity, knowing whether they're coming from a VPN exit point or a known Tor exit node, et cetera, can give you some information. But then, with technologies that are there to construct a baseline, you can look for anomalies. Why did this person construct their account in this way? But then all of a sudden it looked like there was, some activity that was likely coming from, a known bot network. Okay, we're going to red flag them, et cetera. And then the third avenue is just around new dimensions and new ways that people play, and seeing new technologies emerge there. So, a lot of nefarious activity shifted to the blockchain, over the past several years, because it was an easy place to flow money, right? Getting away a bit from fiat and be able to exchange it, especially with some of what Shivani talked about, some of this ransomware attacks that we're seeing, right? How are you getting paid? Well, you're getting paid probably in Bitcoin or some other kind of cryptocurrency. So being able to move that and step it toward the illicit market eventually, being able to track and trace that. There are, mature technologies available to help you track things across the blockchain. And we're seeing things emerge to look and spot trends and anomalies, and then even track that over into fiat. So, lots of evolution, staying on the forefront, making sure you're up to speed on what the latest in technologies are. Everyone will scream, AI and machine learning, and those are real. But without, paying attention to what regulators are pushing and kind of what seems to be the new advent of controls, and staying abreast of that, and looking at the data you have available, both internal and external, and then looking at these new spheres and these new avenues, and making sure you have controls that can cover them. Just sort of screaming machine learning is not the answer. You got to make sure that you have it in a methodical way.
Before jumping into the money laundering aspect, as I listen to you guys talk about what your clients are facing, it sounds like there's still a lot of people that are needed at a financial organization or any organization, to maybe even more so than in the past, to sift through this information, to look at account openings, who's legitimate. Where are you guys seeing financial institutions? Where are those people? Are they in a fraud group? Are they in an AML team? Are they creating separate new account opening functions that sift through this information?
Yeah, what we've seen is that it's not just one team. We're seeing more and more organizations create where some organizations call it a fusion center. So it's the product team working with the cybersecurity team, working with the fraud team, working with data and analytics. Say, okay, how is it that fraudsters are infiltrating our community of customers? How can we link more of the data? Is it just device ID? It's more the technology intersection of let's look at behavioral analytics. How is a customer moving their mouse, for example, along with layer that on top of the biometrics, Face ID or fingerprint, and then layer that against traditional fraud tools like a device ID. So combining all of these aspects, it makes it harder for a bad actor to, mimic all three layers of those items, right? That's where we're seeing that it's a collaboration. And it's not just a collaboration within a financial institution. This is one of the areas where financial institutions collaborate amongst each other. So there is lots of industry discussions, there is lots of industry groups and seminars and conferences where we do discuss together about the current fraud trends and how are we combating it as a group, because we know that once it leaves one financial institution and they put in whatever needs to be put in to address that particular fraud trend, they're just going to move to another financial institution until that financial institution plugs the hole, right? So that's what we're seeing, a lot of collaboration amongst teams and amongst institutions.
We don't want to dive too deeply into privacy rules and regulations. That's several hours of additional discussion. But are the growing privacy rules around the world, or do they permit that type of information sharing, or is it creating a burden that banks would wish didn't exist?
When we're collaborating, it's not so much as sharing the privacy information. It's more about how do you combat the gaps in and the holes with which the fraudsters are exploiting. But yes, the evolving regulatory environment is creating a challenge, because there are sometimes rules and regulations that are being put in that might actually endanger privacy. So I think it was in India that they were considering putting in that organizations have to retain data on users for, I think, 7 years, and even after that user has left that particular application. That leaves like a lot of vulnerabilities for users, and just having that data, having access to that data.
Yeah. So Quinn, we mentioned at the top that we want to talk a little bit about the impact of all of these frauds on the anti-money laundering professionals. Just an open-ended question. With the I think a reasonable term would be explosion of these types of fraud, cyber fraud, ransomware. How do you see that changing what may have been the day-to-day life of an AML team 5 or 6 years ago?
Yeah, it's a great question. And I think my initial reaction when I saw fraud on the list of 8 FinCEN priorities, I was a little bit surprised to see it on that list, but it did make me ask the question, like, why fraud up there with terrorist financing and proliferation? And I think the obvious answer is, as you said, there has been an explosion in fraud as a predicate offense. It's been accelerated by the pandemic. It's been accelerated by technologies, crypto, cyber technologies, all the things that we've talked about so far. And I think the recession, the potential recession that folks are looming or talking about looming around, that's also driving first party fraud, for example. So fraud is certainly increasing, and FinCEN sees that. And I think the message is, from an AML perspective, you guys need to be aware that is increasing. And as you guys are, detecting suspicious behavior, be aware of the underlying fraud typologies and risks, so that you can look for those signatures in the transaction behavior, for example, right? I think I've seen, from a talent perspective, an increased need of cross-training between anti-money laundering and fraud. I think maybe old school AML is more focused on just the compliance aspect. And there's now a need to move into more of the risk and more of the threat, and understanding what those predicate offenses, whether it's fraud or any other predicate offense, understand what those are, because if you don't understand what those are, you're going to have a harder time identifying them when it comes time to conduct that investigation. So I think that's one thing is cross-training, making sure that AML associates, analysts that are looking at alerts, that are conducting KYC reviews, that are, if I'm doing a KYC review and I don't understand the concept of synthetic IDs and I don't understand the idea of robots opening up millions of accounts, like I may miss it, and that's a problem. And so we need to make sure that folks are cross-trained. We need to make sure that our models, our detection logic from an AML perspective, are going to catch some of those typologies, right? And so I talked about those mule accounts before as an example. Do we have logic in place that could detect, a scenario where someone has opened up 10 accounts, using some kind of a fraudulent or cyber attack, and then is using those 10 accounts to layer money? I'd say most of us don't. So those are just some examples.
Yeah, Joe, what Quinn was saying brings up another sort of interesting topic, something again that's been floating around the financial crime world for a decade at least, this concept of convergence between a fraud team and an AML team. How do you see that currently? As Quinn has said, obviously the two things are maybe closer together now than ever. Cross-training is great. Do you see operating models, organizational models changing? And if not, how about the shared use of technology?
Yeah, I mean, there should be a lot more than there is what I would say. We see it in some institutions, which Shivani mentioned this notion of a fusion center and standing that up. Even in places where we've seen sort of a financial crimes fusion center, and sometimes it's labeled something slightly different. It's often a place where information and knowledge is kind of shared, but then it ends up, ownership is a big deal, and fraud for all the right reasons, all the practical reasons. It's a part of the P&L of a business. So there'll be a product line, and we're accounting for X amount of loss, and we're going to try to tune our fraud model, and it's layered in with customer experience. How aggressive do you want to be on the controls? All the things Shivani described in terms of behavioral analysis. How much do we want to sort of stop payments from going through, et cetera? That has a negative impact on the customer. So it's kind of intrinsically linked with the business, whereas a compliance function like AML is intrinsically a cost center. It's a thing you do in addition to your business in order to stay in business, and so it's required. And so you'll typically see more compliance risk group owning that function, whereas the fraud is owned by the business because it's part of the P&L. And so that kind of inherent disconnect is what has stopped, I think, Convergence from just sort of taking over, because there's so many natural synergies. The data, the type of analysis you're doing, everything that Quinn said around, what you're looking for in the compliance function, in the AML function, is you're looking for these latent indicators. You're looking for things that might indicate that there was this predicate offense. So it's not as if you're going to ever find the smoking gun. Well, this is definitely money laundering. It's like, well, these things look like red flags. Whereas with fraud, I mean, you can be more definitive, and fraud, clearly you're trying to get some kind of gain, right? They're trying to get something that's not theirs. And ultimately they'll want to do an act that is money laundering, right? They want to make that money theirs and obscure where it came from, et cetera. So they're inexorably linked. And if you can know that there are bad actors inside your walls, so to speak, that are perpetrating fraud, then okay, what are they trying to then do with those proceeds? How are they trying to move them? And so, whether you're an investigator in either camp, having an awareness and being able to drive it, toward the other is essential. And then from a systems perspective, again, there's just like group ownership that prevents it, but so much of these inherent signals and information that you need that institutions need to be exploiting are perfectly relevant for both things. And so it is a shame when there's not more shared synergy from a data and systems perspective. But we're seeing that happen, but it takes buy-in from the top. It really does take, institutional level, C-suite level awareness of the issues and awareness of the synergies, and then a willingness to collaborate. And that blocks certain institutions. They're just so entrenched. We see a lot more, frankly, in the startup world, in more fintechs. They tend to be more willing to take advantage of the synergies than they need to out of necessity because of cost profile, et cetera. Whereas the more established institutions, to their detriment, they tend to let these organizational divides prevent them from more fully taking advantage of technology as well as operational convergence.
And maybe just one really material example was, and this is actually talked about in the FinCEN advisory on these priorities, was the COVID-19 pandemic and the PPP loans that kind of came in conjunction with that. I think, it was estimated, I think I saw $9 billion, potentially of fraudulent money moving around related to that. But we were hired by an institution to kind of look through their PPP loans and identify potential fraud threats. And interestingly, as we kind of rolled up our sleeves and got into that work, what we took a step back and we said, hey, we're seeing, as we go through these, we're also seeing AML risk and red flags, and we're seeing things that should be updated, or you should run these through screening as well. And so that was a great example of and we were able to kind of do that full assessment, AML and fraud together through that entire PPP loan portfolio. And we found kind of a mixed bag of we found some fraudulent PPP loans, but we also found a lot of accounts that were maybe just missing some due diligence data, and we were able to kind of update that. And so I think that type of thinking where, hey, if we're going to be doing the 4-hour case investigation on somebody because a structuring alert went off, or we're doing a high risk jurisdiction investigation, why don't we also just look at these other potential risk factors and have a more holistic view of fraud and AML together?
That's interesting. So last question to wrap up our conversation. What are some trends that you see probably that are cemented in place, and how do you see, FinCEN's announced these priorities, but for the next 2, 3, 4 years, do you see one particular area of fraud growing more dramatically than others? And if not, what do you see in general? Shivani, why don't I start with you there?
For sure. I do see the continuing growth in the identity fraud area as we become more and more digitized, and face-to-face meetings or interactions are reduced. I think that's going to definitely grow. But what's surprising is also simple things that you think would be going down, like check fraud, is also growing. Fraudsters, they often steal just the checks out of the mailbox, but some others are also accessing the printing software at a company, right? That's more high tech, and embezzling the funds by printing checks. And then there's very simple things where people are leaving their checks like just unsecured in their drawers or on their desks at an institution, right? And somebody just goes in, a vendor goes, somebody that's doing a repair goes in and sees it. I think both very, very sophisticated versions of fraud will definitely grow, but I also see some simple fraud elements like that growing because people are just not thinking about the physical aspects of a physical card or a physical check.
Mm-hmm. Joe or Quinn, anything to add?
Yeah, I mean, I think there's a lot of negatives, and we could talk about the trends on the what bad guys are going to continue to do. I agree with what Shivani said. I think on the positive side, I think we're seeing baked into customer experience now, as new products are rolling out, we're seeing things with identity verification that are helping to attack some of this, right? So I think we're going to see ID get more sophisticated, and try to undermine some of this. Just because your information might be published out there somewhere doesn't necessarily mean that bad guys will be able to use it to open an account. I think, I'm excited about the next, 5-10 years and where that takes us, as much as it is scary, because sort of who controls that, who controls your identity and how. I think we're at a really cool time when, we're able to solve the problem because technologies exist out there, and we can have chains of trust that allow people to control their identity, and really undermine bad guys' ability to steal their identity. So I'm excited about that.
It would be nice to maybe get a step ahead of the criminals for once. Okay, so now let's spend some time with Quinn Hout and look at the Risk Canvas application, in particular how Risk Canvas helps detect fraud scenarios. And then also maybe, Quinn, we could look at, because fraud and AML teams often work so closely together, maybe some features in Risk Canvas that help someone from fraud work with someone from AML, or vice versa, if the case may call for it.
Yeah, absolutely. And it's certainly a huge trend that we're seeing, closer collaboration between AML, fraud, cyber, some of these adjacent areas. So we'll cover that a little bit. As we've talked about in other episodes, starting off with how do we detect fraud out of, whether it's Risk Canvas or any other transaction monitoring system. Fraud's a little bit different where, based on the type of fraud, there may be other tools and technologies that you would use to detect that fraud. What we're going to focus on today is fraud that could be tied to some kind of transaction. And so we'll be showing that out of our transaction monitoring surveillance tool. But know that there's obviously other ways that you would detect fraud from an account takeover perspective. A lot of times we'll be using more cyber monitoring tools like Splunk, for example, or behavioral monitoring tools. So there oftentimes is a plethora of tools that you might need to bring to bear for fraud detection. Today, as I mentioned, we're going to talk about fraud detection on the transactions, and we've pulled just a couple examples in here. Now, again, there's a wide variety of types of fraud, even in among transaction fraud. So there's check fraud, wire fraud, card fraud, you name it. So just a couple examples here that we can talk about. This one is a check fraud, check kiting scenario. And so what we're trying to look for here is we're looking for situations where a check is deposited by a customer, and then that check becomes uncollectible from the originating institution of the check. And then we now look at this uncollectible balance, and we find that the amount of that check is over 200% of the average daily available balance for the last month. So this is could be a situation of someone trying to play that float, where they're trying to, get a big lump sum of money and then break out. So an example here, and this, as I kind of talk about the rule editor here, would be, if Dave, you had $1,000 as your typical average available balance in your account, and then you come in and you deposit a check for $5,000. Well, that's 5 times your average available balance. And then if that $5,000 check becomes uncollectible, hey, that could be a situation where Dave is participating in check kiting. And so that's what we're trying to detect here. As you can see here, we're looking at specifically transactions that have been marked as uncollected check balances, and we're looking for those that are greater than or equal to 2 times what we're calling here the fraud average daily available balance. And so you see here we have an accumulator that is calculating kind of in the background against millions of customers, is calculating what is that average available balance for the past month over some window of time. So pretty straightforward logic here. If you wanted to, you could certainly stratify this by the risk score of the customer. You could stratify it by other markers, that just to get more precise. But this is a good illustration. Another one, just to give another sampling, it would be wire fraud here. We're looking at, total number of transactions in the past day is twice as much as the total transactions in the past month. So we're looking at very high frequency transactions that is very uncharacteristic on that account. And what that could be is wire fraud, obviously. So now once we've detected the fraud, or once these rules have run and created alerts off of that, we would then pivot over, Dave, into the case management tool. And so we can hop over here. And as you mentioned, in previous episodes, we've kind of shown this view of what we call our alert detail screen. These alerts could start off as anything. A lot of times in fraud, you're just starting with some suspicious activity, some kind of marker like that. Here, what I'd love to talk about is an example where we may have an alert that comes in as an AML alert. In this situation, we've got a surveillance alert with a high velocity funds movement. And as we get into it, we see that there's the transactions that were involved here were several transactions that declined at this medlx.com site, which is a Russian merchant. And as we look at those declined transactions, we may say, well, hey, maybe that is evidence of an account takeover or some online scam. And so if we saw that and we said we want to refer that over to the fraud department, and we would have a few different options in Risk Canvas. We try to make this really easy on different variations of how I would get that over to Dave, in the fraud department. We can just reassign this item. I can reassign it to Dave, and I can say, Dave, take a look at this from a fraud perspective. Here's what I saw. Probably a more popular option for our customers is actually spawning a new item. So if I spawn a new item, it'll actually let me create a brand new review in the case management system, and I can select from that what type of new alert. And in this case, I want to maybe spawn a fraud case. I can specify the activity that I specifically saw there that I would want Dave to look at. And if I do that, if I spawn instead of reassign, I, as the AML analyst, can continue to work this from an AML perspective, while Dave at the same time looks at this from a fraud perspective. So there's different options. And the nice thing in Risk Canvas is that it's all correlated. So if I come over here as a fraud analyst, now I'm Dave, over in the fraud department looking at this alert, I can see, okay, here's the information that came to me from the AML group, whatever they filled out on that spawn form. And then I see, the related items. So I can see that surveillance case that the AML team is working on. I can, as a fraud analyst, I can open that up and see what great work Quinn is doing over in the AML world and the evidence that he's uploaded and so forth. But I can certainly look across, all the other alerts and signals that are on this account. I can look at the transactions. So again, these are the two transactions that Quinn flagged and sent over for a fraud investigation. Here again, I see some high value transactions that have both been declined on this merchant. So I can, if I want to, I can then pull open the transaction toolkit. I can look for additional transactions that might be for that merchant code. I can look, for that merchant name. I can look at, I can sort the transactions by amount and look through it that way. So, and if I see, additional transactions that appear suspicious, I can pick a couple. I'm just picking a couple at random here. And I can pull those into the subject of our investigation as well. So something in the phone app store, something at TGIF seems suspicious. I guess nobody is there anymore. So
this question might put you on the spot. Can each of the investigators, if this particular financial institution's policy allow it, can each of the investigators create and file a separate SAR? Or conversely, could they also work on one SAR together if they wanted to file?
Yeah, absolutely. We've seen both situations and handled both of them from a software perspective. Certainly, you could file a SAR because, and these things may happen at different speeds, right? The fraud case may take more time to investigate, whereas, the AML case may be cut and dry and you're ready to file a SAR right away. So, you can do it independently, or we even offer the option, Dave, to kind of merge those together again, right? So I'm going to take the inputs from my AML case and I'm going to take the inputs from my fraud case. I'm going to merge those together into a single, financial crime case, and I'm going to file a single SAR, from that has both of the, the evidence from both of those investigations behind it.
Well, that's great. I mean, I obviously demonstrates a really well-designed, well-thought-out system. And, as you mentioned, we spoke about it earlier, the convergence of fraud and AML, these are the types of tools that help that become easier.
Yeah. Maybe just closing out, you would want to do some due diligence on the parties involved with, the case. You would want to write up a narrative. You would, add any other subjects, victims, anything else. Write your disposition, and then decide if it's going to be a SAR or not. And then, as we've shown with the other episodes, Risk Canvas makes it really easy to kind of move directly into the SAR filing, to e-file that with FinCEN. So all of this data on the SAR form would be carried over from the fraud case and be automatically populated. It'll walk you right through the form. Again, even these step 1, step 2, a lot of that's going to be filled in already for you. So it really, step 3 is maybe worth mentioning. Obviously, there's a fraud section on the suspicious activity information. And so you can choose from, one of many of these options on what type of fraud do you believe you've detected. And then obviously you'd want to back that up in the narrative that you write as well.
Yeah. Excellent. Yeah, this is fantastic. Like we've seen in previous episodes, Risk Canvas really looks like, one of these tools that can really help accelerate work and benefit the users. So thank you, Quinn.
Absolutely.
Well, we want to thank Genpak for hosting our discussion today on fraud risk and why FinCEN considers fighting fraud to be a national priority. Don't forget to check out prior and future episodes where the other 8 national priorities are discussed in detail. Thank you.